Yes, man. Hey, what's going on? Welcome. Hey, my name's Gerald Peters, and welcome back to the channel where we talk a lot about stocks. As you know, my passion, my hobby is trading and investing in the stock market. I'm also a full-time professional real estate investor. That's how I spend my days now, trying to make money with money, whether it be hard assets, digital assets, crypto assets, is to build a portfolio of assets that would help protect and provide for my family. I assume that's why you're here too. I believe that anybody, regardless of age, race, or financial situation, can become, if not, I know they can become financially independent, but I believe you can become rich. So this is a short video. I'm guessing my plan was to attach it inside of the petersreport.com. And today I want to talk to you about anchor points and how anchor points, I'll keep this short and simple, how an anchor point can become a valuable tool for both an investor and especially a trader. I day trade, swing trade, position trade, and I love my dividends, man. I do a little bit of everything. I would suggest to you, don't try to do every possible thing you can do, okay? It's going to take you time. There are some things you can just start doing, and then as you go about life, you learn them. This is never an arrive or evolve thing. This is a thing where we are constantly improving, much like golf. You're never going to arrive. You're never going to be this magic trader, this, consistently profitable. Even when you are, you're going to have times and seasons and cycles where the market moves against you. I have a large real estate portfolio. Some years it's wildly profitable, and other years it's very draining and taxing, and I wonder why I'm doing it. And those days I wish I had all my money simply in the stock market, where I could sit here in the warmth of the great northern outdoors and trade and invest stocks. And then the stock market crashes. Yes, we can hedge. Yes, we can get short. But when you've got millions in the market, you're coming down. And so every asset class has its time and its season and its place and its troubles. So diversification is the one free lunch, I promise you. Now, what we have here, man, is an anchor point. An anchor point is simply the bottom of a move. Let me pull this up. If you go to the petersreport.com, I know most of you have, but if you haven't, and this video, by the way, will be right up here in the front. You put videos that I like and look for little nuggets like right here. I either put videos that I like or videos that I've made, okay? This pattern I say on here, you must memorize the pattern you see in this picture. You must see it in your sleep. It is the master key to understanding price movement and the money flow. So let's look at the right side here. See it in red. It says best time for selling. Let's assume we already know what that means, and the market is moving down. We wake up on Monday, big down bar. Wake up on Tuesday, down bar. What's an example? Let's go to our charts and let's look at Cisco. That one recently came down. Let's take it over. And what do we see on Cisco? This big explosion down. Price gap and go, baby, either to the up or to the down, which is actually a trade strategy inside of my playbook for the money flow. I haven't talked much about that, but maybe soon here we will. This here, that is a gap. Now there's all this gaps have to be filled and whatever, yes and no. That's not always true. It can be true. Like there's a gap. Did it fill it? Uh, how close does it need to be? You might, I don't know. I don't know. Did it fill it? I don't know. Maybe it'll fill it 10 years from now. Who knows? That's not really my concern, is the filling of the gap. I mean, if you're worried about that right here, there was a gap and go. I mean, it gapped and it ran. Well, look, it didn't come back and fill it. Or did it? You could say that filled it. So I don't know, man. Whatever on the gap thing. I know it dropped down. Well, here's what I'm trying to find. Where's the bottom? So what I do is on the day of the current lowest low, which is right here, that becomes an anchor point. So think if you're out in a boat and you just throw the anchor over and boom, tie off the boat. Bottom. Think of that as the bottom. That's what I'm looking for. One, and then here's the next step is I need it to confirm. That means the very next bar, which was right here, by the way. Is it above this? Yes. Check. We now have a bottom. We actually have a tradable bottom. Okay. Now, about this chart example, if you have my course, Getting Started with Stock Charts, these moving averages are all out of whack. Okay. This doesn't scream run up and buy to me. If you ever hear me playing that song by the Beatles, Come Together Right Now, and there's all these different renditions of it. Well, all I'm trying to remind people is the idea that I don't know if you guys catch on to this. The whole point of that is to take your mind back to the idea that the 5-day, the 10-day, and the 20-day need to come together. That moving average convergence divergence needs to come together. That true strength index needs to come together. We call this confluence. What do you call it? So we need to see those come together, and that merger of price is going to let us know that something is about to happen. Let's back over to something a little more reasonable. So here we see, now notice this, just looking at this picture here, what you see. So down here, I got my 2 anchor points. These are the bottom of the bottom. Now you might say, yeah, Joe, it's easy looking backwards. No, we do this going forward. So as I'm day trading, I would do the same thing, man. I would be over here. I'd be taking this thing. Let's come over here. And I would be like, okay, anchor point. Well, guess what? There's a new anchor point, man. That's the bottom of this current run. And then what? Here's another one. Right? And what these do is these give us tradable points. These also help create market structure. And if you're into trend lines, what are you going to connect your trend lines to? Right? And so these are points of bottom. We don't know. I don't know where it's going. So what I'm doing is I'm just playing a video game. Basically, I'm trying to create points of of price contact. I'm trying to find the bottom and find the top. And so here would be what they call the apex, or I would. It's my apex, right? Down to my anchor, back up to my apex, down to my anchor. Right. And so these give me tradable points. They also give me options for possible profit targets because I know support and resistance are created by these structure points. And that's all this is a structure point. Some people might call it pivot points. Call it whatever you want to call it. The simplest way to try to capture these, and this is an example here, is okay, next day's down, 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 down. Now we've broken this box. Once this box was broken, we have broken market structure. And so if we're looking at this, we have now entered into a stage 4 decline. So once a stage is identified by relation of price in relation to the 20-day moving average, but even more important is to the fractal stages that's created with price that we can obviously see. This is obviously a stage 3. Now, it's important to look back in time and see them obvious in time so that you can see them obvious going forward. Now, when does it get tricky? When price breaks below the 20, above the 20, below the 20. So, what is that telling you? It's telling you we got a little conflict going on here. So, when in doubt, stay out. If it's not clear, another option is to trade less. But if we take it over here and we see this, it tries to break out, it comes back down, 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 down. Well, what happened? Watch this. Meaning this is growing organically. I don't want this to seem simple. We had a box building here. We had price break out. And look, I would have said, cool, it's a dividend stock trading below the 200. That's called the B&B trade. It can pay its dividend. But then look what happens. It breaks down. I hate this. Come on, man. Go away. There we go. Why is this like this? Okay. It breaks down. And what happens? Down, down, down. Once we break this box, guys, I'm concerned, at that point. Wow, this thing is really messing with me. Let's clear this up. All right, clean this up. Sorry. So once we get down here, we're kind of breaking the box in this area. And then we down, especially here. So this one is a hard one. So as you're looking at this chart and you see wow, it's above 20, below 20, above 20, below 20. That's not necessarily something you're going to run up into and trade. But as an investor, I'm just watching it. And then right here, I get this anchor point. And you say, how do you know? Well, the next day, the stock rockets up. I wonder why it's keeping that there. Huh. Anyway, anchor point, and the next day, what happens? Price is above. That says this is the lowest low of this structured down move. As of right now, that is all you can work with is as of right now, because we actually don't know. So I got to play the cards that I'm handed, not the cards I wish I could get. Does that make sense? And as you yeah, I like this. He come grooving up slowly. He got that's what this is. Blue his knees. He's got to be a joker. No way, please. Nice. That's a nice one. This is a breakout right here. Now, this happened fast. We didn't get our typical 4 days. I like to see 4 bars for market structure. Most of you guys know that. And so all this is on an anchor point. It's just a structured move down. Once you can identify, okay, I'm in a stage 4 decline. I'm no longer in a stage 2 uptrend. I'm no longer in the stage 3. And now that I'm coming down, like we saw in Cisco, what I'm waiting for is price to stop. Give me a bottom. Once I can identify it, I only need one bar to tell me that, meaning 1 bar higher than the down bar. Now, if it's not extreme, this is where the other indicators come in. See that? And see that? That is an extreme high that has fallen to an extreme low. To me, I call that a completed move. If you're in a swing trade, hey man, it's over. Take your profits. Anything else is going to be bonus. You don't necessarily close it, but you got to realize this thing is probably about run its course. Now you're going to notice that started happening right in here. And that's why you can't run off and just short every RSI or buy every RSI. It doesn't work like that because look what happened. Nothing. Yeah, it paused. It'll almost always pause you. And sometimes that pause will work. And that's why we want to split the difference. So if I'm in profit, I got to recognize that, hey, there's probably a 50-50 chance this thing's going to turn. I don't like 50-50. If I've made money, let me take my money and maybe with a little bit or a portion of it, I might leave it out to play the 50-50 game. And, so if I was short in this structured move, I got to start taking it down. Well, let's say I'm just waiting to get in and you say, cool, there's my anchor. right in here. I'm going to try to get in, but then it breaks it. Well, I don't know what to tell you. We're back into a down move. So at that point, it's like if you're swing trading, you're stopped out. If you're position trading, cool. You wait for the next setup. You let the next anchor happen, which we had right here. You count 1, 2, 3, 4, and you're looking for it to get above the 5-day exponential moving average. That's my trigger. That's it, guys. That's the class today. Something as simple as that. I'll show a few more as we close out here. I'll show a few more as we close out to some beautiful Beatles rendition. This is like a soul style. It's a Beatles song, I'm saying. I love you, and you love me. One thing I can tell you is you got to be free. Come together right now over me. Woo. That's fun. I'll do a few charts here for you to see.
Here come old flat top, he come grooving up slowly. He got juju eyeball, he won.
Notice that spread. Hair down. Remember, come together. We want to see this coming together right here. Nice. That come together is what we're looking for. You could take a shot at these, but these rarely work. We call this a broken family inside my course. So I'm going to show you the real. Coca-Cola. I know you, you know me. One thing I can tell you is you got to be free. Come together right now over me. Yeah. As a trader, this come together we can play on. There's my entry. There's my target. Short-term traders, look at all this. You know you're going to get caught up. That's a sticky area. Come together right now over me. Nice. About like this chart, huh? Nice. Oh, come on. Man, wish it wasn't so cold out here in the woods.
He rolled a coaster. He got
early warning.
He got muddy water. He won mojo filter. He say one and one is three.
Check out Coke. Hard to see.
Come together.
Down, 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 down. Come together. You don't get an actual up move until they come together. Now we can get ahead of this, okay? Because we're anticipating to come together, just like we anticipate in the song. That right there, that, and that almost always happens after these zones of congestion. Here's our anchor point. You're like, how can you know? Look at the chart. Down, 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 down. Next day, above it. Thank you, baby. Next day, come above it. 1, 2, 3, 4. You could kind of wait because on the fourth day, it comes down. I probably would have taken that as a shot. That's telling me this thing wants to go up. And I've got a tradable point as a trader, so I would want to stop loss. Oh, I got to stop. I can't have copyrighted shit on here. So I do a lot of, if you haven't noticed, I do a lot of, these are covers, because covers typically aren't copyrighted. I get in trouble for the music that I play. Come on, man. You ain't got enough damn money, Amazon and Google.
Please give it very.
I can't.
How's it going?
All right, come on, just play the song. I like hearing all the different renditions. Here's Coca-Cola. Here's our anchor. Nope, hers is not as good. Anchor point. 1, 2, 3, 4. This is our first possible buy entry. Remember, we're going to drip buy into this. I'm going to nibble a little. Pulls back. Cool. As long as it holds this as a trader, this is my stop zone down in here. And be flexible. Sometimes I have people say, well, what about stop? Whatever. If they stop me out, I can get back in. It's called click the fucking button. It's not that hard. So boom, now we're in. Look, this is going our way. We got an anchor point. We got price momentum. We've already had the curl and the crossover, the moment, everything is lining up. That's called confluence. Everything, the first signal was the RSI and the anchor point. That's where all trades start. That's where your stop losses start. That's where your profit targets start getting built. And that is the start of market structure, man. I appreciate you. I hope you enjoyed this little video where we, let's see this one. Oh, yeah. Let's go out on something big, man.
Here come on, flat top, we come moving up slowly. He got juju eyeball, he won holy roller. He got hair down to his knees. Got to be a joker, he just do what he needs.
I don't know about this one. All hell. You know me. One thing I can tell you, got to be free. Oh, here we go. We're going to do this death metal style. It's the trade I just put on yesterday. Oh, here we go. Do death metal style. Early morning he got muddy waters he won't dolphins swallows he got he's 1 and 1 is 3 he got going. Okay, that got a little crazy, but that's fun. Anyway, we'll end right here. This is a trade I just put on Crypto Coin Dash. This is my own money, not leverage. So I'm trying to turn $310 into $333.50. That's the simplest way to do it. Trying to turn $31 into $33. If you can do that over and over, you can make a lot of money. Because soon that would be 3,100, selling it for 3,030. Quick 10%. Take your cash and you're rolling profits forward. Here's my anchor point. That would make my stop zone down here. That starts to give me market structure. Now I look for previous highs. And I hope you see how all this comes together. And it starts with the anchor point, man. Appreciate you guys.